All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Glasshopper77, good afternoon to you. Peoria Beat, good morning to you. R Pink, thank you so much for being here. Thank you for modding for me and always doing a great job of it. Yes, guys, please do hit the like buttons on your way in. Please hit the like button if you get any sort of insight into the market from this live stream. Justin Trades, good to see you in here. Crypto Wander 5813, thank you for being here. Thank you for smashing the like button, and thank you for mod, my man. Guys, we are pumping. Look at this big bullish engulfing candle so far on the day. Now, I know the day is not over, but that is a big bullish engulfing candle. Closing down, engulfing, excuse me, yesterday's bearish candle. And our anchored VWAP overall is holding. Guys, this anchored VWAP, I want to talk about this a little bit. But first, I would like to say, we talk about a lot on the channel, these big aggressive pumps followed by these channel-y structures. And that's when you see, in this case, it's buying exhaustion, right? The buying exhaustion starts to come in, and then you generally will grab liquidity and dump. So the bears, or I should say the bulls, are not out of the woods yet. This could still make a lower high and roll over, or like a double top, taking the range highs and roll over. And if so, we would be looking at some sort of ABC in here, and then roll over to make new lows. But man, money flow on the daily time frame curving to the upside. We saw the confirmed bull divs on the daily time frame into very, very key support. Anchored VWAP, multiple high time frame pitchforks, bullish divergences, and this thing could pump daily, money flow bullish divergences on the daily time frame. And we might be pushing up to new range highs above 67.2. Now, when we see this aggressive pump to the upside starting to be followed by kind of this ascending channel here, we could continue to grind in this ascending channel for a couple more weeks, guys, and continue either rejecting from taking out some liquidity around 65.5. We do have that daily or that weekly and naked weekly point of control at 65.7. I'm going to be watching very closely for the SFP of this high into our weekly level and into our naked weekly point of control, pretty much at the same exact spot. And I will be looking for shorts there based off some of what we're seeing on the chart. But at the same time, I am still long from lower, and I'm still added to my trade, and I still will look to hold some of this long trade from $58,000 open all the way up to at least 67,000 to take out those range highs. If we look here, yeah, nice. It has been a nice pump. If we look here, I just want to go to the 8-hour time frame real quick. We are setting up for that choppiness to give us a dump. Now, I'm not saying it's going to dump us today, and we're going to talk about the volume profiles. Today's daily candle close is going to be highly, highly important. But what we need to see, what we don't want to see, is if we continue to chop within this kind of channel-y structure here, and we continue to create bear divs. If we get the 8-hour that pushes us up maybe to 65.5 or 65.7, and we form another drive of bear divs as we're taking this liquidity in this channeling structure, that could be a pretty big signal for a short trade. And that is something that I'm going to be watching as that hedge against the swing long trade. So that would be more of an intermediate time frame kind of look at the market. Another thing that we were looking at here, let me just hide this volume profile. Another thing we've been looking at is the descending channel. So on the larger time frames, we had the big dump down, and then we've been forming that descending channel, which is selling exhaustion. You get that aggressive dump followed by some selling exhaustion. And if we can start to break out of the descending channel, that's when we could see a really aggressive pump, guys, maybe even into the mid to high 70s. So I want to throw that channel on the chart because that channel is going to be important. Look at where the highs of the channel are coming in. It's at our next purple box of resistance. It's grabbing our internal liquidity right into that naked weekly point of control and weekly level. So on the higher time frames, we've had the big dump. We're seeing the selling exhaustion come in. And then on the intermediate time frames, the more intermediate and lower time frames, we're seeing this pump from 57.7 starting to get some weakness. You get the big pump from 57.7. Now we're starting to get that channel-y structure in here. And if we throw on, let's just go ahead and throw on our channel here. You can see that the highs of both the channels are coming in right in that purple box. Just generally right in this area here is where we could see us continue to pump today until hitting that, maybe grabbing that liquidity, and then see a move all the way back down. Now, if we bounce from the bottom of the channel, I would be expecting us to continue pushing higher. We're not there yet. We don't know what's going to happen with that quite yet. But it's starting to look, high time frame starting to look pretty bullish for Bitcoin, especially if we can break out of the bigger descending channel, pretty much breaking above 67 or 65.7. If we can break above 65.7 and our pitchfork band, by the way, today we had a perfect to the dollar rejection from finally touching that pitchfork band. And I was looking for the long. I was waiting to hit the bottom of that pitchfork, which we finally did. Hit the bottom of the pitchfork here. We're pumping up. We're hitting that lower limit of the lower band right now today. That is kind of why we're seeing the pullback. I did let you guys know in the Telegram, as soon as we hit that pitchfork band, I said we need to watch for a pullback to backtest the value area high of our 6-week long range. So let's go ahead and now talk about the volume profile aspect of this, because remember, the two most important things in the market are volume and liquidity. So you can see this is our 6-week long range that Bitcoin's been trading in. We were able to, after holding our anchored VWAP, which if we do zoom in on lower time frames, I will show you this. It was acting as resistance. We came up, we had some resistance in here, small pullback. We broke above it. Once we broke above it, Thursday, July 2nd, you can see we backtested it as support, made new local highs. Backtested it as support, made new local highs, at least on Coinbase. Backtested it as support, made new local highs. So it is holding as support. What was once resistance in this downtrend is now flipping to support, which is a bullish sign. If the bulls can remain above this anchored VWAP, we could see a pump to the top of the range, 67.2. That 67 or that 6-week long range. So let me throw that back on the chart. We're breaking out of the volume profile and above the value area high with a high amount of volume. If we zoom in onto the 1 hour time frame, what I said in the Telegram is, guys, I expect to see at least some sort of pullback from the touch of the pitchfork band, from this touch here. But what we're looking for is the bullish backtest. If we can backtest this value area high very locally, like today and tomorrow, and hold it as support, then I would be expecting us to come up to this purple box of resistance just above us. And finally, maybe grabbing that liquidity and hitting our weekly level at 65.7. Also, if we look at this move up, looks like we have some 1-2s in here, 1, 2, 1, 2, 3, and we need a couple more 4, 5s in order to finish this impulse to the upside. So it does make sense that, yes, we're seeing a pullback right now. This could be our first wave 4 before seeing another push up in a wave 5, breaking above that pitchfork band, maybe hitting that at the bottom of the box is a 782 fib retracement, and then see another pullback and another wave 4 to flip that pitchfork to support, and then come grab liquidity as that second wave 5. 1, 2, 1, 2, push up, and then we can get those 4, 5s in there. So I am looking for local continuation. Also, if you guys didn't catch any of the long trade, you could potentially, with proper risk management, right? If we kind of get another drop to the value area high again, I wouldn't take it from where we're at right now. But if we do get another drop to the value area high, you can look to long the support of the value area high and look to take it up. Your first TP would be just above the highs that we just created earlier today. That's a decent scalp trade there, but I would really be looking to take it up to grab that liquidity at 67.5, and that is a nice scalp trade there. It's a scalp trade on the breakout and the backtest of the value area high. You would be looking for continuation up if it holds. So I don't know if you guys caught that. It's a little bit late now, or if we want to see, what we would want to see is zoom in on like the 15-minute chart, and we would want to see kind of this corrective movement. And maybe you're going to wait actually until you grab those lows and then get back above it. You want to SFP these lows, get back above it. You'd have that 3-wave corrective move. As soon as you get back above it, you can long it, or you can long the SFP. If to me, I probably wouldn't do that. I would wait for a move back above it. The value area high, but it's a scalp trading possibility I just wanted to highlight to you guys. Now let's zoom back out here, because I also want to talk about the larger time frame. Let's go on to the daily time frame. I want to talk about our 6 months long range, or 5 months, 6 month long range, which is our range from $60,000 to our current price action. We fell down below. Hold on, let me get rid of this alert here. Let me just hide this so we can hide that alert. You can see we fell down below the POC or the value area low. We back tested that value area low. Once you reject it on the bearish back test, you expect it to make new lows below $9,000. We did that. For the past few days, after seeing an aggressive pump with some confirmed daily bullish divergences, we have been butting our head up against this value area low. You can see we hit up against it, we wicked above it, but we couldn't close the candle body above it. We see a pullback. We hit into it again late last week, early this week, hit into it again. Couldn't see a close above it. You get a pullback. That was yesterday, the pullback that we saw yesterday. Now, if we can close our daily candle body, the body of the candle above the value area low, which is around $64,100, then we could see continuation and acceptance back within this upper range in here, meaning that we could pump easily to the POC, and if we break above the POC, we could pump easily to the value area high at $77,000. And yeah, today's daily candle is super important, guys. Today's daily candle close is going to be super important above 64.1. And if we turn on that local range, the last 6 weeks of price action, you can see we're also breaking out of the value area high of that range. You can see right now we're attempting to break out of the value area high of that range. And if we close our daily candle above that value area high, which is 64.4, then we could see continuation in the breakout up to grab liquidity of these important liquidity grabs within the range. I do want to go real quickly to our liquidation heat map, because if we zoom out to the last month of price action, which has been this local range that we've been trading since June 3rd, it's a little bit longer than that, but you can see we have the liquidity up here that we're grabbing some of it today, but we haven't come up to take all of it out yet. And that liquidity was the largest liquidity in this range so far, the largest liquidity cluster within this range. And so we're coming up to grab that, but we haven't grabbed all of it yet. And I would suspect that this impulse that we're seeing on the lower time frames, this intraday impulse, we need a couple more 4-5s, like I said, from yesterday's lows. Some 1-2s, get that push up, 4s, 5s, 4-5s. We could finally grab the rest of that liquidity. We could start to see some bear divs on the lower time frames inside of this channel E structure. And then if we get that liquidity grab, we could look for the short. And that short would be nice for our 8-hour time frame. So the 8-hour time frame, setting up the bear divs right now. Setting up some bear divs to play out, setting up another drive of bear divs to play out if we get that liquidity grab of 65.7. Also, money flow bear divs on the 8-hour already. All right, let me check the chat here, guys. Welcome in, everybody. Thank you all so much for being here. Let's see here. Can you check oil? Yeah, we can check oil. Do you want me to check U.S. oil, like crude oil? Which ticker do you want me to look at with that, Ogman? And Eric, nice to see you in here, man. We are doing well. Yep. I hope you're doing well as well. Hope you're doing well as well. Wow, that's a horrible sentence. All right, but yeah, it's looking nice. Now, one thing that I did point out to you guys earlier this week, yesterday, I pointed this out to you guys yesterday. Let's zoom out to the weekly time frame. On the weekly time frame, for the first time in quite some time, since the end of our last bear market, we are printing bullish divergences on the weekly time frame. You can see lower lows in the price action, higher lows in the momentum waves, and for the first time in this entire bear market, we are printing and confirming some bullish divergences on the weekly time frame. I've been letting you guys know for months now, for at least a couple months now, that I do think that the lows of the bear market could be in the high to mid 50s based off of the super important macro support that was coming in at that $57,000 to $56,000 zone. Two major pitchforks, which have been highly respected throughout most of the bull market. And we actually have our multi-cycle pitchfork where we are bouncing from the bottom of that pitchfork after rejecting at our all-time high from the midline, after rejecting at 83K, 82.5K from our lower band, we are finally coming down for the first time in this entire bull market and hitting the bottom of the pitchfork. And you can see we had a little bit of wickage below it, but no weekly candle closes below it. And because this is a high time frame pitchfork, that's what's going to be important. A weekly candle close below this pitchfork support level. We are just not seeing it yet, guys. And this is very, very exciting for the bulls to have this macro support of multiple high time frame pitchforks with your anchored, volume weighted anchored trend support. Let's say that. We also had a naked monthly point of control down there. We had some daily levels coming in there. We have massive support. Now, on the weekly time frame with Market Cipher, which is the oscillator that's printing the bull divs, our money flow is still curving to the downside, or it's still draining out of the asset. And really what we want to see is we want to see this money flow start to bottom out and curve to the upside. That is probably going to take us, let's go ahead and pull this full screen. You can see it's trying to start curving here. If we have another big weekly green candle, I suspect this will at least start to bottom out. And then we would probably want one more week of another green candle, and then we would start to slowly rise up here. But that is what we really want to see. We want to see this money flow bottoming out and starting to curve over here with the bull divs. That would be a sign that we could get that much bigger pump to the upside. High 70s, or even taking out our 82.8K highs. All right, the one other scenario that I've been talking about, which I still do think is a highly likely scenario, is the accumulation forming. So as far as time goes, not the end of the bear market, but price could be close to the end of the bear market, right? Because I've been looking at a couple different accumulation patterns in here. We've been looking at accumulation within this range that has been forming over the past 6 weeks. And then we're looking at a larger accumulation range that could form over the next few months. But we want to see that bottoming reversal pattern start to form. So you have your left shoulder here, your head here. Maybe we're going to come up, reject from 65.7 and then come down, make a higher low. Or we're going to reject from taking out the highs of the range and then come down. But we want to see that kind of 3-tap pattern. Tap 1 in here, a tap 2 in here, and then after rejecting from one of these purple boxes, we want to see that tap 3 or left shoulder, and that would give us a nice, very bullish swing opportunity to break out of this range, flip it to support, and continue working our way up to some value, the value area high of all of this price action. The value area high would happen to be where our pitchfork midline is. Then we could get a major pullback in this zone to end the bear market. And you can see, if you look at the bottom of my screen here, that would be in October, which time-wise would align very nicely. And symmetry-wise, as far as an accumulation goes, would align very nicely with the end of the bull market and the 4-year cycle. Now, I understand that is speculating very far ahead of time, and we're still dealing with this range here. And until we trade the range until it breaks. So we're within this smaller range. Now, today's developments are exciting for Bitcoin, because if we can close that daily candle specifically above 64.1, then I do think we will see continuation up to one of our resistance boxes, one of the purple resistance boxes. 65.5 to 65.7 is where I'm really looking at within this first purple box. And then within the second purple box above that, I'm looking really to grab the liquidity of the range highs into your pitchfork band. And let's think in terms of pitchfork trading. If we do manage to break above the lower limit of the pitchfork band, we have to be careful for a fake out SFP and a fallback below it. But if we can break out of it, maybe even see a small SFP to backtest. If we backtest this pitchfork band, then you would expect to work your way up to the next pitchfork resistance, which would be the range highs. And then we might fall from there. Now, obviously we were looking at even a smaller range, right? Fractals within fractals within fractals. Higher time frame we're looking at the last 5 months since February, since the 60K lows. We're looking at all of this as a big bottoming potential range. For the last 6 weeks, we've been looking at this range in here that could still continue. It could still continue to develop. But then if we zoom in even further, for the past 9 days, we've been looking at a sideways upper range in here. And we are starting to break out of that sideways range. And that could be that impulse kind of flat correction in here. And it would be a running flat because you didn't take out the lows. And then a push up. Now, the bearish case scenario is that that is going to be an A, B flat, C, where you're most likely going to take out the liquidity of the range highs and then roll over to make new bear market lows. In the higher time frames, we would want to see this breakout continue here, breaking up in a third wave, maybe rejecting from your $72,000 golden pocket before seeing a pullback and then continuation up to your next resistance. And we would want to see an impulse, a daily time frame impulse, which means it would take a couple months to play out, right? An impulse in here. And if you remember, the last impulse that we were looking at on the daily time frame, let's just zoom out to that daily time frame, was a bearish impulse to come down to hit our anchored VWAP. We were looking at, from the rejection of 82.8, we were looking at that impulse. And yes, I understand that our wave 4 was much longer than our wave 2. Let me throw that on the chart. We were looking at this 1, 2, 3, 4, 5. Even within the rejection from 67K, we were looking for an impulse to end your fifth wave. We had the 1, 2, 3, 4, 5. We had our 5-wave impulse to finish that fifth wave. I told you guys leading up to this low that we have multiple high time frame Elliott wave scenarios that could be playing out, where then we could see really big pushes and explosions to the upside, even to start breaking above 82.8. Now, I'm not saying that's going to happen this week or even this month, but it is possible that from this macro low here with daily and weekly bullish divergences into high time frame supports, that we could see a giant rally in here. First order of business is to break out of that descending channel. Remember that descending channel that I just showed you? Pretty much the descending channel is between the lower limit of the pitchfork band and the bottom of the pitchfork. That's your descending channel. We need to start breaking this above, flipping it to support, and then continuing. Is that going to happen right now, or are we going to see the pullback first to our golden pocket and get that accumulation? I'll be watching both scenarios, and I will be keeping you guys updated. We'll be definitely trying to take those larger trades from either scenario. But yes, that's kind of what I'm looking at here, guys. Alex, welcome in, my friend. Thank you so much for being here. Yes, we can check CL. Decrypto, good afternoon to you. Please do like the stream, you guys, if you get any sort of insight into the market. We will look at CVD. And thank you, R Pink, for bringing this up, because right now what I am seeing on CVD is actually a bit concerning for the bulls. Let's go ahead and pop over to our CVD. I'm on the 15-minute time frame here. Now, remember in yesterday's video, if you guys watched yesterday's video, I explained to you guys very, very clearly how the bears were in control yesterday, because the dumps that we were seeing, this initial dump here, you can see a lot of shorts came in, and it was on a giant increase in open interest. That means new shorts, new positions were opening up, successfully pushing the price to the market to lower prices, the asset to lower prices. So that is a strong, healthy move to the downside. Then we got a little bit of a rally to backtest our channel, and we saw a little bit of a dump on some of those late shorts or some of those long positions. We saw some long positions stepping in actually there. You can see our long positions were stepping in there. But then they started getting stopped out once we started our next big dump here. And you can see that big dump was a lot of short positions coming in. And once again, it was new short positions that were coming in. So the bears were in control yesterday. And the move down that we saw was a healthy, strong move to the downside. Now, what we are seeing from yesterday's lows is a bit concerning, because you can see from those lows, and let me just go ahead and take a vertical line and throw it on where those lows were. You can see pretty much ever since then, our CVD has been overall increasing here. So meaning long positions have been stepping in, but it is on a decrease, a very nice and steady decrease in open interest, meaning that this push up so far has been mostly a short squeeze to the upside. It's all those late shorters that shorted specifically in this zone that are getting stopped out. And look at, it's no coincidence that we get our big aggressive pump today as soon as we start taking out those highs, right? And you start squeezing out all the shorts that had their stops above this high, the shorts that had their stops above this high. As soon as you start taking it out, that's when you get your aggressive push up, because it's literally triggering those stop losses. And it's a big short squeeze. Now, with a short squeeze is not a healthy move with new positions opening and new money opening to support the push to the upside. So if a short squeeze ends and we do not see new long positions stepping in to maintain the price, you can fall right back down on a short squeeze. And we need bulls to step in. We need bulls to defend the backtest of this value area high, and we need the bulls to step in here in order to continue. The short squeeze that we're seeing is a pretty aggressive short squeeze. Look at this consistent drop in open interest here. Very, very consistent drop in open interest. And man, I just, we have to be careful. I don't know how many times where I've seen a nice big push to the upside, everyone starts getting super bullish, and we find out, we go to our order flow, we see that it's a short squeeze, and then what happens? It falls right back down the next day, kind of like a Bart Simpson pattern, right back down. And I would like to see the bulls step in. Preferably, we would like to see them maintain above the value area high of our 6-week long range, which, let me go ahead and throw that back on the chart. And you can see we're in the process of the back test right now. I might even take a scalp long, guys. If we come down, let me go to the 15-minute, actually, 12, 15-minute here. I'm looking for a 3-wave corrective move here, because we're looking for wave 4s and wave 5s now, because we had our 1-2s in here, 1-2. You could even say it's a triple 1-2. This is your 3rd wave. Now we need some 3-wave corrective moves in 4s and then 5s, and then 3-wave corrective move in a 4 and then a 5, and then another 3-wave corrective move in a 4 and then a 5. So we want to see that start to happen. And then you can look for those bearish divergences on low time frames between all of these highs to trigger the short position. And that means that our first pullback dipped a little bit below the value area high. We just got a lower high in the making. Now, if we SFP that low, so in order for me, I would probably not, it's a bit too risky, because if you fall back inside the volume profile, this value area high, there is a real chance that you could dump again, especially because I just showed you guys it was caused by a short squeeze. So if we fall back inside the volume profile, it's not the best signal. But we know that we're in kind of this impulsive structure today, and we know that if it's going to be an impulsive structure, we need some more highs inside of it. So what I would look for the scalp long is, I'm not going to take it if we SFP the low at 64,250. But what I would look for is, if we get that 3-wave corrective move, we take out that low, and then we start to break back above our value area high at 64,420. That is when I would trigger the long position. Stop would go below that recent wick, and I would be targeting overall that 65.5 to 65.7, and we would get that scalp long opportunity there. So that's something we can look at during the stream. We'll keep an eye on this 64,250. I will set an alert here just in case we're looking at something else. I'm going to hide that so it's off the screen. And so far, I have to say, this is looking pretty nice for the 3-wave corrective move. If we look at our volume here, you can see that the big push up, we had a big spike in volume on the push to the upside. And so far, as we're grinding sideways and down here, you can see volumes decreasing. That's the sign that this is a corrective move here, this small pullback we're seeing. And I expected the pullback, guys. When you hit a high time frame pitchfork level like that, you're going to see some sort of reaction. Let you guys know about that in the Telegram ahead of time, and we are pretty much doing what I talked about in the Telegram, that bullish backtest of the value area high. All right, let me check the chat here. Dr. X, good evening to you as well. CUD, okay. Could BTC forming 4 5s, 4 5s? Yes, I think you're, sorry about the name, but I do think BTC could be forming some of those 4 5s in here. I do. Because yesterday, and by the way, guys, yesterday, I talked about how there was a couple scenarios within this move here, right? We were looking for that flat correction, and really the majority of the time, the flat will take out the lows. So we really need to take out those 61,450 lows. But in a running flat correction, you do not take the liquidity of the lows. And clearly, because we've already made new highs, clearly, if we're saying this is a flat, it has to be a running flat. And now we're impulsing to the upside, and we've taken out the highs. So therefore, that move is already likely done. This is already likely to be confirmed as a flat, running flat correction. Now, from those lows from yesterday, yes, you can see the chop in here, the choppy overlap, right? You kind of get your initial push up, this 3-wave grindy move down, another push up, a grindy move down, and there's overlap between the highs and the lows. So you can't say this is like a 1, 2, 3, 4, 5. Maybe you could actually, if it contracting diagonal, I don't know. No, I would say you can't. But we're looking at, some 1 2s, 1 2s. You could even say this is a third 1 2. And then this is where your third wave starts. As soon as you flip that VWAP to support, you get the big push up. And we know that in third waves, you get that nice, huge spike in volume. So it makes sense. So now, depending on how you count this move up as a double 1 2 or a triple 1 2, you have 1 2, 1 2, and then this could all 1 2, 3, 4, 5 to start the third wave. So you could say that I have a valid count for a double 1 2 here. Then if that's the case, we need 1 4, 1 5, another 4, another 5, right? If it's a triple 1 2, if we're saying this is a 1 2, 1 2, 1 2, and this is where you start your third wave, and you have a 1 2, 3, 4, 5 to finish your third wave, we're still in our first fourth wave pullback, and you would be looking for 3 new highs. 1 2, 3 new highs, right? Either way, we are expecting at least 2 more new highs to be made locally. We want to see that. That doesn't mean we can't drop a little bit lower and take some liquidity. And let's pull our invalidations for those. So if we take our Fibonacci golden pocket retracement, I'll put it first on this low here as a double 1 2 impulse, right? If we look at this as a double 1 2 impulse, if you come down and hit 63,250, 255, really, 254, 255, that will invalidate the multiple 1 2 impulse. Let's take it from this low. And because this low is going to be higher, this we'd be looking at as a triple 1 2, but it would give you a quicker invalidation. And we'd already be so close to the other one anyways, that I would say it's likely to be invalidated as an impulse. So if we come and hit 63,362, then we could say, uh-oh, the bulls are in trouble. The bulls are in big trouble. And actually, for me personally, if we lose the POC again, like if we fall back inside of this range and we lose the POC again, it's going to look really bearish. Your POC is also going to be where your intraday volume trend support is, right? Remember, that's what a VWAP is, volume weighted average price. And I have it set on the daily time frame. So yesterday, you come up to it, you reject, you make new lows. You come up to it, you reject, you make new lows. Today, break above it, support, you make new highs. Break above it, support. Well, we chopped in here with some consolidation, but you make new highs, right? So we want to see that VWAP. If we do drop down there, we want to see the VWAP, which also happens to be where the POC is, hold. And yes, we could come down and hit the POC and not invalidate the impulse, right? The hard invalidation was hitting that 63,362 golden pocket. And our POC is above that at 63.8 almost, 63,750. Okay, let's see. Yes, Divine said this earlier. Okay, yep, gotta go to the beginning. Okay, cool. TGIT Tuesday. Yeah, what's up, Time Attack? Much love to you, man. Thank you for being here and thank you for modding. Alex, let's see. What's the value area high you have down? We are flipping it as we speak. The value area high right here is from that range. So let me go ahead and zoom out to the hourly chart. You can see it's from our range going back to what is that? That low on Wednesday, July 3rd. If you take that volume profile here, and you know, there's a couple ways to look at this. You could bring it from the actual lows at 59K. It doesn't change the value area high. Or you can add a little bit of this consolidation in here. But you can see it's pretty much where we're at right now. Let me check. I think I was looking on the Binance chart earlier. Maybe it was the index chart. Okay, another thing I want to talk to you guys about, because we're seeing this with Ethereum right now, and we'll go into Ethereum. I do want to go into a couple of the altcoins as well that we're seeing pump pretty big today. Injective Protocol, Near Protocol, Zcash, Sui. Some of these coins are pumping pretty good today, but you can see this was our previous range from 60,000 to 83,000, and then we crashed. We lost it here. The value area low of that range is coming in at 65,500, pretty much right at these highs, right? If we throw that value area high on the chart, previous range value area high before we broke down, right there. We have not been able to really get back above it. You can see we attempted to. We saw a failed auction above it. We fell down below it. We bearishly backtested. We made new lows. Now we're coming up again for another higher time frame backtest. If we reject there, which also happens to be where our liquidity and our weekly level and our naked weekly point of control is, then we could fall back down and make new lows and continue channeling in that descending channel structure. And we would be looking at like a tap 1, tap 2, tap 3 in a model 1 accumulation, not a model 2. A model 2, you would make a higher low, probably around golden pocket, and then continue up. But it's very, very important to start closing candles back above 65.5. Closing daily candles above would be a very bullish sign. And that's why this is our first big resistance, right? It's volume resistance as far as naked weekly points of controls go. Let's go ahead and turn on those naked weekly points of controls. I will show you. You can see we have that naked weekly point of control coming in right above the liquidity from Monday, June 22nd. So very, very important when you see a liquidity grab into a volume. Remember, guys, volume and liquidity are really what run this market. Liquidity first and foremost, volume second. So if we can see a liquidity grab, this is why I'm actually pretty excited about taking a potential swing short from 65.5, because if we get that liquidity grab right into that naked weekly point of control and then start to lose this high again, it could give us a big dump to the downside. Now, on the other hand, it could just give you a small dump to backtest the value area high of this range, which is where we're at right now, and then you could continue going. We won't know that, but if I get the SFP, I will take the short, and if we start to bounce from the POs or the value area high, I'll take some out, and then I'll let myself get stopped on the rest, right? Because this is a head short against longs that I have down in this area. Now, another thing I want to show you, we are starting to get back. We could look at all of this as one bigger range, right? From 60K sideways. It is pretty flat. I mean, obviously not this part here, right? And this is a pretty aggressive pump. But if we take this range and we combined it with the last 6 weeks of price action, oh, now something very interesting is occurring for us on the charts. Let me go to our daily time frame. Well, look at this, guys. We are starting to find reacceptance. If we combine the two ranges, you break back into it, backtest, 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 and now we could move up to the POC. It's all about if we SFP 65.5 or not. If we SFP 65.5, we could be in trouble. If not, we could come up to take out your range highs at 67.3, right? Right into that POC. And in terms of volume profile trading, if you're able to find reacceptance back within that volume profile, you backtest and hold support a few times on the value area low, you do have a very nice probability of working your way up to test the POC. Now, remember, the POC is considered the fair value for the asset. So pretty much for the entire year of 2026, I know this is in February, but you know, it's at the beginning of February. So pretty much for the entire year of 2026, the fair value for Bitcoin is at pretty much 67K. If the market is overall bearish, meaning the a lot of the big players think that Bitcoin will sell off when it gets to fair value. You know, we'll see a sell off when it gets to fair value. So if we come up there and we see a big sell off, you would most likely expect to make new macro lows on the chart. And that also could give you that bigger Model 1 accumulation, right? In here, you get that descending channel, you get that selling exhaustion, but you do get a new low. And then you would want to see, after getting a new low, you would want to break out, back test, and then continue. Okay, let me go ahead and read the chat here. Yeah, what's the value area high you have down? We are flipping as we speak. So, Alex, I'm not sure which value area high you're talking about. I think you're talking about the value area high of this range, this smaller 6-week long range. And yes, we are flipping that value area high. If we look on Binance, or the index, excuse me, breaking above it, starting to flip it to support. Okay, let's go real quickly here to Ethereum, guys. Ethereum is actually seeing a really nice pump and breakout. And we are looking at well, first off, the other day we were looking at the value area low and the golden pocket for a potential long position. You can see that golden pocket was just a little bit above the value area low, but we did get that overall bounce from the bottom of this week, 8-9 day long range. This is what we talked about last Friday. 8 to 9 day long range, breaking out with a high amount of volume. We have not SFP or local highs. You can see we pumped straight through them, and we're continuing to pump here. But if we look at our prior range, our previous range, which was this guy up here, right around our pitchfork band, in and around the pitchfork band, you can see the value area low of that range is coming in around $1,914. We have not backtested that value area low. Bitcoin, when it broke down from its prior 4-month long range, with this high here, that first range high, Bitcoin backtested the value area low and rejected. That's why it made new lows. Ethereum is trading a little bit differently here. You can see on Ethereum, first off, we never backtested it. We didn't get high enough, but we also didn't make new lows on Ethereum. You know, this was equal to Bitcoin's $59,000 low, and Bitcoin went, or $58,000 low, and Bitcoin went to 57.7. So we do have a double bottom down here that's concerning. But if you remember when we talked about Ethereum last Friday, we talked about this here, that the first move up was a 3-wave corrective move. That is a bad sign for the bulls. We also saw a 3-wave corrective move down. So now we could be looking at some sort of 3-wave corrective move, right? With all of this last 9 days being a flat, right? You had your initial impulse, 1, 2, 3, 4, 5. That's your A wave. You get your running flat in a B wave. And now we're looking for a C wave to bring us up. The C wave could end on the bearish backtest of the value area low. So if you are long on Ethereum, watch out for the bearish backtest here. I am long on Ethereum, and I am looking to take some profit at 1914, at least 50% of the position. Now, if we break above 1914 and especially close a daily candle above 1914, you're coming up to the POC, baby. You're coming up to 2K. Let's see here. I think there was a naked weekly right up around in that area. Maybe it was a naked daily. Yeah, naked daily at 1900. So just beware of that, because the first move up that we saw, hold on, let me get rid of this. This first move up here was a 3-wave corrective move. ABC. A, B, C. Because of that, and because we did not take out the lows, we have a higher probability of this being a larger sideways corrective move before taking out those lows. So I'm actually looking for some pretty nice shorts around 1915, or if we break above that, around 2000. Yeah, and it would honestly make sense as well. As far as our bigger move to the downside, you can see we kind of have some choppy 1-2s, 1-2, 1-2, 1-2. Ah, man. 4, 5, 4, 5, 4, and then we would need one more 5. Now I understand that your third wave is relatively short in that, compared to your fourth, your 5s here. But we do see extended 5s all the time in bear markets, or at the end of bull markets. Another thing to look at is our overall 5-year long range. 4 or 5, now it's 5 years long. This goes back to, what is that? May of 2021. So over 5 years long now, guys. We've been in this range, and you can see, why did I have down here in this green box, why did I have heavy spot buys down here? Because it was our fair value of Ethereum for the past 5 years. Okay, so now, are we going to see, after seeing a flat in here, are we going to see us hit the value area low? If we do, you know, I plan to sell some my spot also if we start to reject from 1915. Just the spot I bought at 1500. I would sell it at 1900, and then I could look to come down to 1450 to buy some more. Oh, thank you so much, Arpink. Yes, guys, I do want to take a second to shout out the partners of the channel real quick. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts on those trading fees if you deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. That's not just on trading Bitcoin, but also the altcoins. Anything you're trading on the USDT futures markets, you can earn extra rewards for, up to $8,100 extra dollars. And in my opinion, if you're already trading on the futures markets using BYDFI, that's a great extra incentive to get that portfolio growing. We also have some of the best initial deposit bonuses in the entire industry. If you deposit $100, you can get a 50% deposit bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit, and 10% deposit bonuses up to a $20,000 deposit, which is double what most exchanges will do. I've partnered with BYDFI to create that Telegram community. Earlier today, guys, I let you know that we were probably going to see a pullback from hitting the pitchfork band. I let you guys know we were probably going to dump down after hitting the pitchfork band. We were probably going to dump down and backtest the value area high. Right? I've been keeping you guys updated throughout the entire. I try to keep you guys updated as much as I can, not only on Bitcoin trades, but on the altcoins as well. And if you're interested in joining that Telegram community, it's free. All you need to do is join BYDFI using my affiliate link in the description. Deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses. But once you've done that, once you've signed up and made the minimum deposit, you click the Telegram link in the description of this video, or Rpink did post it in the chat, and you type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. /verify and your user ID. And I do think it is a win-win for everyone, guys. You guys get access to what I'm thinking throughout the day with Bitcoin, you know, any trade setups that I'm looking at with Bitcoin or the altcoins. You guys get discounts on trading fees, some bonuses as far as volume moving, you know, the 8100 moving, depending on the amount of volume you move, and the sign-up bonuses here. And it's free to you guys. You know, the money you deposit into the exchange, you're not paying it to me. You're not paying it to BYDFI. It's your money. We're just having you deposit on the exchange in hopes that you will try out that exchange and like that exchange and stick with that exchange. Okay, I have a few more partners of the channel. One more non-KYC exchange. It's Blowfin. They're offering VIP one for 30 days. If you deposit $5, you can get a $10 voucher. And they're giving some initial deposit bonuses where if you deposit $10,000, they'll give you $1,000 futures bonus. I have MEXC and Bybit as my KYC exchange partners. They're both offering some discounts and some initial deposit rewards as well. And then lastly, I have NAMI Trading, which is this at the bottom of your screen, this momentum and money flow indicator down here. And I use this for confirmations on whether to enter or exit trades. And like as we're coming up to this purple box of resistance, I want to see some bear divs printing on the chart. Maybe after we get that SFP, right? We have our little chop in here. We get our push up. We start to get some chop and we get bear divs in between all this chop in here. That'll give me the trigger, the confirmation to enter the short. So since I've been using NAMI for confirmations on trades, not just randomly taking them at that resistance or at that support, my profit margins have increased drastically. It gets me into the good trades that are more likely to play out, and it keeps me out of those trades that are less likely to play out. So if you're interested in purchasing NAMI, I have partnered with them to get you guys 50% off. If you click the affiliate link in the description below, and when you're checking out on the website, just use discount code DIVINE50 and you can get 50% off NAMI. Okay, that is it for the partners of the channel. Let me see here. Yep. Okay. Thank you guys so much for being here. I also wanted to look at there was another coin. Was it Solana? Okay. Yes. Solana. We were looking at last Friday, we were looking at this descending channel from just this kind of structure in here. And we were looking at if we could start to break out because you could see the top of the channel was right where the bearish backtest of our pitchfork was. But if we can start to break out of this channel, then we could see a push up to sweep all the liquidity of the channel, right? And so we are breaking out of the channel with a nice big spike in volume in here. And it does look like it's impulsive price action from the lows. We have a 1, 2, 3, and we could be in a pullback right now for a 4. And that could pull us all the way back to the bottom of the pitchfork before seeing a 5th and final wave to backtest our value area high since the lows, since June 6th, June 5th, June 6th here. But you can see we're working our way back up to that value area high. Now, depending on what happens with that the value area high rejection, which is going to be around 78.6, depending on what happens there, we could see a big dump, right? Because what I am emphasizing is we have fallen back inside this volume profile. You can see we got, first off, a larger 3-wave corrective move. Now we fell back inside the volume profile. We back tested it. We keep making new lows. If we come up for a higher time frame back test and reject, then I would suspect we're actually going to hit the POC because we front ran the POC. So I would suspect we're actually going to come down to 63 or 73.6. If we can break back above it, even if we reject from our local golden pocket, we might be able to flip it to support and then continue to actually make new highs and hit that naked monthly that we front ran a few weeks ago. In a larger bullish case scenario, so our bearish case scenario on the higher time frames, let me just zoom out to the daily. On the higher time frames, we are looking at this possibly being an A, B, C, where now we're going to see a wave 1, wave 2 up to golden 3, 4, 5, right? You're coming down to take out your lows at $60 pretty much is what we're looking for. Because if this is a 3-wave corrective move, you're looking to take out the lows of that corrective move. But there is a bullish case scenario as well. And the bullish case scenario is a double 1-2 impulse at this point. Wave 1, wave 2, a secondary wave 1, a secondary wave 2. And we have to say that because there's overlap between the highs of 1 and the lows of 2. And then you would look for this to explode in a wave 3. And that would probably bring us up to take out our $98 highs. And then we might get some 4 5s coming in. Or the wave 3 is going to explode us up to hit the pitchfork. We see small pullbacks and 4 5s to take out those highs. Now, in my opinion, is the bullish case scenario, the higher time frame bullish of a double 1-2? Is this more probable than the bearish case scenario? No, not in my opinion. In my opinion, I think we could make new lows. And with that, we could come down and SFP the lows into that naked monthly point of control at $58. Above us, we do have a couple naked monthly points of control as well. Let me go ahead and turn those on. Okay, this one's old. I don't know why that's there. You can see that naked monthly point of control is just above the highs from July 3rd. July 4th, actually, was 4th of July. So looks like we also have another nice short opportunity for a double top here. And maybe we would be talking about this as some sort of contracting diagonal 1, 2, 3, 4, 5 in a contracting diagonal here. And then you get that dump. But if it's a contracting diagonal, that's a motive wave. You would be looking for a dump, a pretty deep dump, but you wouldn't want to take out your lows at 60. You would want to probably end it around the 786. This is theoretical right now, guys. But yeah, you'd end it around the 786, would be around the value area low, grabbing some liquidity, and then you would push up. After seeing this, you would push up pretty aggressively. So a couple higher time frame scenarios in there. We'll cover those right now. Solana is breaking out pretty nicely out of that small time frame channel. And with that breakout, it does look like we're in some impulsive price action here. 1, 2, 3. We could see a 4 and then a 5 to come up. And remember, once again, 78.6 is going to be an important resistance now. That is the value area high of the last 6 weeks. If we break above the value area high, it's a very, very high likelihood that we sweep that entire channel liquidity, all this channel liquidity, sweeping out this high into the golden pocket. And liquidity grabs into golden pockets are also nice shorts to take. So I will do this now. I'll set an alert on that high. And if we get the SFP into the golden pocket, so let's see, SFP into, we can look for that short as well. Yeah, we can check XRP. Oh, and I was going to check a couple other coins. Let me scroll up to the top of the chat here and look at those coins that I was going to check here. Yeah, oil. Now, I don't know if you're talking about U.S. oil. I don't know why this doesn't work on this like that. But U.S. oil, it does look like we could be in some sort of impulse here, but we do have now overlap between the lows and our prior lows and our new highs. So, you know, what could we have said, like a 1, 2, 1, 2, 1, 2? You know, all of this is that those 1, 2s building, and then you get your third wave. You would have wanted to see continuation down. Now that we're seeing some overlap here, you could say that this was some sort of a flat and a B, and then this was your C, and now oil's about to pump up to take out all these highs, unfortunately. And also what's happening geopolitically right now, it probably makes a little bit more sense. But you can see this just giant liquidity trail that was created on oil. It's like that parabolic. Let me see here. Where is it at? Kind of all these highs that are in here. Sweep, 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 sweep. So if you start to break up here, it could literally run all of these together because that is a lot of liquidity that's really close to each other. Obviously, the value area low of that range that you broke down from is at like 88.3. And if you reject, you could come down to golden pocket and then see that 3, 4, 5, right? To take out all those highs. Yeah, and also, unfortunately, like this clearly looks impulsive here, right? Impulse here, correction, and then you could see another impulse up, even if it's a larger ABC or some sort of, but because this is corrective in here over the past 3 years, you're looking to take out that high on the weekly. And that high is going to be at $129. It would be really nice if we could pull the volume profile. Yeah, so first sign that we're going to get a bigger pump is it obviously if you break back above 88.3 or like the value area high, value area low of this range, 88.5, 88.3-ish. Let's see if we can break above that. And if you do, you're very likely to sweep all of this. CL. Oh, okay, that's the one you wanted me to look at. Yeah, okay, so this is old. We can get rid of that. It's the same chart though, but yeah, look at this. So this is that corrective range I was just telling you about, right? You have that kind of corrective range with that weekly high at 129, 130. Yeah, 129. It's actually a little bit higher on CL chart, but you can see how we were chopping in this corrective channel, right? We broke out of the channel. We have a pitchfork that we were looking at that we pulled from some important pivots on that shift, on that bullish market structure shift. And we pulled it because we broke this daily time frame lower high. That's your bullish break in market structure. You broke above it. So now you can look for higher lows before higher highs. But we did come down to some important support. Look at it's the back test of the channel. It's also the bottom of your pitchfork. And you can see how this midline was holding. Held, and then you finally broke it down and came to the bottom of the pitchfork. So you're breaking above your lower band of that pitchfork right now. And let's pull that volume profile of this range. You can see the back test of the midline is pretty much going to be where the value area low is. And here on this chart, it's at like 89.3. Okay, but today we're starting to break above the value area, or excuse me, the POC. After bouncing from some important support, you're breaking above the POC of your range that goes back to March of 2022, so about 3 years, 4 years. If you close specifically the weekly candle above that, you're very likely to test the value area high. And look at where the value area high is. It's a zone, right? It's between this value area low and this value area high. Right in here, where the pitchfork midline is. And it's likely to, right? As far as pitchfork trading goes, you bounce from the bottom. If you saw that small rejection on the first test of the lower band, small rejection, you made a higher low, now you're breaking through it. You're probably going to get some sort of pullback to back test it, and then you're going to work your way up to the midline, right? Which is also the value area high of the range. So oil coming up to $90 to $91, $89 to $91. And then if you reject there, that would be your impulse, right? Impulse, you get a correction to back test the POC, and then you could sweep up really quickly. And this would be a 1, 2, 3, and then you'd sweep up and take out all of this, and you would look to take out 129, 130. So, we didn't know that the whole ceasefire was going to get disrupted a few weeks ago when we pulled this pitchfork, but remember, pitchfork trading is based off human psychology, and human psychology hasn't changed. Sure, the ceasefire might have ended here, and that's why oil might have started spiking, but it's because human psychology is predictable. And that's why TA works. It's astrology for men, but it works, right? And there you go. You bounce from support. Did it bounce? Did the ceasefire end because we had support here? No, that's not why, but it's predictable based off human psychology. All right, guys, let me get a drink of water real quick here, and then we'll go on to some other XRP. Yep, we can look at XRP. That's Bybit. I went Coinbase. All right, we haven't checked XRP in a while, but we were in that kind of that last 4-month long range. It was that triangle that we broke down from. And remember, this was a perfect trap too. That triangle was that perfect trap because we pushed up, we grabbed the liquidity, and then we dumped. And we talked about this a few months ago on the channel, how when you see these triangles, you get a bunch of breakout traders that are trading the breakout only to grab some liquidity, trap all the traders above the breakout, and then dump. So now we've been trading in this lower range in here for about, 6 weeks as well. Same kind of thing as Bitcoin. We are at the value area low of a small consolidation range in here, but it's not really major support, right? If you look at this little range, and I know the line doesn't look like that, but when you zoom in on like the 2 hour, 4 hour, that is where the value area low of this little range is. And we are starting to find kind of a bottoming formation in here, like a left shoulder, head, right shoulder type of thing. You can see we bounced from the value area low of our 6-week long range. So it's likely we work our way up to this POC. Let's zoom in now to the 2 hour chart. Okay, and let's pull our golden pocket. Yep, golden pocket's right there. So your next big resistance, and this could be a nice short as well, from that 130 or 113.3 to like 113.7. Let's also look at if we have naked weeklies there. No naked weeklies, but we might have a naked daily there, a little bit below it. Because it is a little bit below it, I would preferably see us wick above it to hit the golden pocket and then close like an hourly candle or a 4 hourly candle at or below it to see that bigger dump. But we're pretty much just trading this range until it breaks. Now, we talked about this on Ethereum as well. So our prior low in here was a 3-wave move up, right? A, B, C. You get new lows in a wave 5, right? Or a new low to finish an impulse. Now, from that area, this is your new low. What do we see again, you guys? We see another 3-wave corrective move, making a lower high. So now we have to give priority because this move up was a 3-wave corrective move, just like priority here was to make new lows. We have to have priority that we're going to make new lows. So are we looking at some 1-2s, 1-2s, or maybe this is actually now that if we take out these highs, which I think we just did, yep, we just took out those highs, we would have to look at this as a wave 1. We would be looking at some sort of flat in here for a 2, and then you would look for that 3, 4, 5, right? So the golden pocket, naked daily, is a nice zone to look for a short. Actually, what I will do on XRP is set an alert on that 618. 618. Okay, we will do short. I can let you guys know in the Telegram if we get that short from the golden pocket, because remember, that is also where your range POC is. Right in that zone. Sultan Sal, thank you so much for the kind comment, man. I appreciate that you like the TA. Todd Stevionis, welcome in, man. CJ, you as well. It's good to see you in here. Do you think BTC can come back to 61K again before going back up? I would say it's more likely right now that Bitcoin is going to continue up. It depends on how our daily candle closes, right? If our daily candle closes back below the value area low here, or the value area high here, 61K, which would be this low here. The way we would have to look at this, okay, from our 57.7K lows, clearly this is impulsive here. So we have an impulse here. Then we have a flat correction in here for a B wave, right? So an A wave or a 1. This is either A or 1. You have your running flat here in a B or a 2. Now, if this is going to be a C wave, technically the minimum, absolute minimum target of your C wave is to take out your A wave highs, which we just did today. And then you could roll over and literally make new lows below 57.7. But it's very, very rare. Generally, if you look at the ABC correction and you take a trend-based fib extinction from the lows of 1 or A to the highs of 1 or B or A, you know, and then down to your running flat lows, your minimum target is usually the 618, but your most common targets are between the 1-to-1 and the 1.2386. So what I'm saying here is, even if this is an ABC, an A, B, C, your most common target is to come up between 69 and 71. Your minimum target would be around 66K. Your minimum target a majority of the time. Now remember, the absolute minimum target is to take out your A wave highs. So yes, it could roll over, but it's not likely. It's very, very unlikely. So we would be looking, even if this is an A, B, C, maybe we're going to come up and hit that 66 or reject from around, you know, taking this liquid, the first purple box, right? In my opinion, it would be more likely that we're going to come up and take out 67.3, right? In an A, B, C, taking out 67 and then roll over. Now, if this is the macro bullish case, instead of looking at this as an A, we're looking at this as a wave 1 in an impulse, running flat in a 2, and then you want this 3 to really push up. And that's why I'm saying we could go to 77K. Let's actually turn on our 1.618 target for that. It would be 74K. Okay, now what else is at 74K, guys? It's a very, very important level if you don't remember. If you pull your golden pocket, and let me just zoom out here to make this easier on me. If you pull your golden pocket from the 82.8K highs down to your lows, well, look at that. 74K. So could we see this in the bullish case scenario? You're going to see a 1, 2, 3 pull back in a 4, and then maybe your fifth wave is going to end at 77. And then you'd get a look for a 3-wave corrective move down towards golden pocket. And because this started with an impulse, you're looking for a higher low here. And then you would look for continuation, right? In here. A larger shift, trend shift there. We're not there yet. But to answer your question, no, I don't think it's more likely that we come down to 61 first. I don't. I think it's very, very likely. Now, could we do it after we come up and hit 65.7 and see that be our minimum A, B, C, and then come down? Yes. Remember, that's also where our bearish channel is. Not that one. Oh, did I delete them? Our bearish channel top is up there. Those lows were back testing the midline. Back tested the midline. Back tested the midline. If it holds, you expect to work your way to the top of the channel. And because today's this push up so far looks like an incomplete impulse, I would expect to come a little bit higher. Okay, interesting to see BTC and oil pump at the same time. Yeah, well, we know why oil's pumping, right? We know because of geopolitical conflicts that are happening and, you know, supply and demand shortages and things like that. That's why oil was pumping a little bit. Bitcoin, I don't know fundamentally if there's anything happening with it. It's bullish on the technicals, right? Look at this major support level. Guys, this was 3 major pitchforks and our anchored VWAP and a naked monthly point of control with weekly bull divs and daily bull divs down there. Yes, let's check gold and silver. Let's do gold first. Gold. All right. Well, we bounced from a golden pocket. You can see this was a 1, 2, 1, 2. You might be able to count a double 1, 2 impulse in here with this being a 1, 2, 1, 2. Here's your 3. There's a 4, 5, 4, 5 in there. Either way, we rejected from the value area high of your range. And remember, we were looking at this overall descending channel because we're looking at gold being in a larger corrective move that could take 2 years, right? Based off the impulse that we were seeing, the much larger impulse we're seeing. And right now, really what we're focusing on is this little range in here. After bouncing from your golden pocket, you backtested bearishly the POC and you rejected. So you expected to come down to the value area low. And look at, we did come down to the value area low. Or actually, yeah, at the time, it was the value area low. Let's see, could we say this is some sort of, because you have overlap between these highs and lows here. Actually, you even have overlap here, so you couldn't say that. Man, it's really hard to count this as impulsive, actually. And because of that, you're looking to take out that low. Okay, so this is our small range that has only been going on since June 10th. So for about a month now, you're in a little small range from a month. But that's not the really important range to look at. We're looking at our much larger range on the daily time frame of all of this upper price action. You can see we have come down to the value area low of that range. But after bouncing from the value area low, you rejected on a lower high at that channel midline. And remember, we're so close to grabbing this liquidity here that it is likely that we are going to come down and grab that liquidity. We also rejected from the midline, and this move up that we saw did not look impulsive. This move up in here did not look impulsive. So it's more likely that this overall corrective structure continues here. If we don't SFP 3886, then you're most likely going to come down to 3645. So now we can look at this move down over the past week, and we need to see where important resistances are. I guess you could pull an even smaller range in here. That's kind of your sideways price action. Yeah, and you are at the value area high. It's also going to be the POC of, or no, it's not the POC. Okay. Yeah, I would really be watching actually the resistance that we came up to today. Value area high 786. If you see that strong pullback and now look at we're starting to lose the POC, So if you close today's daily candle below 4061, it's not going to look good, and you probably are going to come down, continue this grindy structure down here. 1 2 1 2, and you would actually probably look to sweep for, like, see some, maybe the 3 ends on sweeping this low. So like a 1 2 1 2, you sweep the low for 3, and then you see some 4 5s to finish it. Of course, they would not be this short in time, but time and price, but I was running out of room. Yeah, and you are seeing the weekly green dot here, but money flow still looks really bearish. And it is very likely now that we do grab that liquidity at 38.86. And in a very bearish scenario, we could come down and hit this pitchfork band, 3,500-ish, 34 to 3,600, depending on time-wise. Silver is similar. We were in that corrective move after the wave 3 highs. Remember, this was 117. That was our wave 3 highs at the 2-to-1 trend-based fib extinction. So wave 1, wave 2, wave 3, and we're looking for a wave 4 before seeing a wave 5 on the weekly time frame. So that means overall within the next year or 2 years, we're expecting new all-time highs on silver. But remember, this wave 2 pullback lasted about 2 years, and your wave 4 could last as long or longer. Not always. We do have that rule of alternation. So, you know, this is super long and dragged out in time, so we could see something shorter for your wave 4. I think that's the case. I don't think silver's going to pull back for like 2 years, you know, like hover sideways and down maybe to like $48, $47 for 2 years. But we just have to analyze what's in front of us, right? Get rid of this. All right, so obviously we had this little, let me just come to the 2 hour. We had this channel that we were trading up in, and we swept the second pivot of the channel finally. Last week we were looking at that bottom, and remember it was a double bottom. That's why we had this here. It was a double bottom. So we saw a corrective move to backtest the channel, bearishly backtest the channel, and then we come down and sweep those double lows. Now, after sweeping those double lows, we are seeing a little bit of push up. I would be looking at this range, this sideways range in here. We can actually get rid of this channel now because we already lost it and we already bearishly backtested it. So it's kind of played with its usefulness there. Okay, SFP into value area low. Take out the double bottom. We're above the POC. You can see today we flipped the POC from resistance. Resistance, flip. Now, if we come down and flip it to support, you would expect to work your way up to the value area high. So you do have a possible scalp long position around $58, 58.3, which is where the VWAP and the POC is. And you could look to take it up to, actually, I would be looking to take it to grab that liquidity. But let's pull the golden pocket. Yeah, that's exactly where I'd be looking to take it up to. So you can see the SFP into the golden pocket. I'm going to set an alert on that for a short at 60.76. But if you're looking for longing silver, I would want to see this slow corrective grindy chop to backtest that POC. And then you could look for the long. Once it starts to bounce, you could look for the long. Your stop would go below wherever that low is. And I would be targeting that. And that's a very nice trade. Now, what I would target as a TP1 would be the value area high at 60.36. So TP1 at a 9 to 4, TP2 up there, 67.6. All right, let's see here. I want to go in onto the 15-minute and look at this. Yeah, you were seeing the bear divs. You can see the bear divs coming in here. Higher highs, lower highs. We just printed another bear div just now. You have some bear divs here. So the local time frame bear divs suggest that we are going to pull back to back test that POC. But you can see very clearly here earlier today, break up, resistance, pull back to VWAP, holds, you break above it. So if we pull back to VWAP again, it's also going to be the flip of that from resistance to support. And then around 60.76, I will be looking for a short off the liquidity gram into that golden pocket. I know that on the daily time frame, we had that green box here at $58. If you guys remember, it was a naked weekly point of control, naked monthly point of control, daily level, 0.382 fib, and there was something else. It was really, really nice support, like super nice support. We've hit into it, and unfortunately, after we hit into it, let me hide this to get that alert out of the way. After we hit into it, this move up looked like a corrective move up. That's not what you want to see. The one thing that we could say if you're looking for a larger, all of this being an A, we're going to get a B, and then we're going to get a C that's going to take some time. You could say this is some sort of contracting diagonal in here. And remember, a contracting diagonal is a motive wave, so you'd be looking for like a 1, 2, 3, 4, 5 in here. Sorry, I 1, 2, 3, 4, 5 in here. Contracting diagonal. Then after the low, you could push up to your golden pocket, which would be at $75. Or actually, let me make sure that's the right golden pocket. We'd pull it from the highs to our lows. We'd put that on log scale because that's more than 30% drop. Yep, okay. Yeah, you could look for a move up to 90. Take out this liquidity into your 90, and then you'd be looking for another new low after that. And that would make sense as far as time goes for our wave 4 correction on the weekly time frame. For now, I would just be looking at this. I don't know if you're looking Crypto Wanderer to buy this like spot, or if you're actually like trading this lower time frame, you know, like derivatives trading this. Lower time frame, I would be looking for potentially another new low very locally, just because this move up didn't look very impulsive. Yeah, there's, you know what, 1, 2, 1, 2, 1, 2. You have overlap here. You have overlap here. Yeah, this is very hard to count as an impulse in here. Just an update. Kodak, welcome in, my friend. It's good to see you. Just an update from the bond markets. Bonds, we have a breakout in yields. Look for shorts. Okay, breakout in yields. I did see also that the 30-year fixed, the mortgage rates were going up a lot too. 66 to 67K max. Yeah, that's ultimately, Kodak, what I'm looking for is to come up between, so there's two levels that I'm really looking. The first level is at 65.7-ish. That's where your SFP is at 65,550, and into that weekly level and naked weekly at 65.7. But it is still possible to come up to 67.3. And actually, that would even, as far as the larger bearish scenario, that would be nice to see in terms of, let me go to the daily time frame, in terms of the accumulation, right? Because what you would want to see here is a or this is your left shoulder here. This is your head here. And then if you come up and you take out that high, First off, that would be a bullish break in market structure, right? Even if it's an SFP of the high, it's a new high. That means you could get a big short from 67, and you could be either looking for the Model 2 where you get a higher low or a Model 1 where you get a lower low. But we want to see some sort of accumulation forming in this. And remember, that's that channel where the top of the channel is also going to be at your first purple box. 65.7 or SFP the highs at 67.2-ish. Trimmy 2001, welcome in. What do you think of a long position at 63.460 and a short now down to that point, please? Well, I would definitely not be shorting right now personally, because look at, we are back testing the value area high. So if you back test this and it holds, you're looking for more upside. Now, if you start to lose it, you could, it's dangerous. Let me go on to the 15-minute. The reason why a short is dangerous right now is because we could be looking for this three-wave corrective move, right? A, B, C, just to take out this low in here, and then you break back above, flip it to support, and then you continue up. We did have some bear divs on the chart. You can see 15-minute bear divs here. And then Nami had some 1-hour bear divs. And 8-hour bear divs. We had some 8-hour bear divs on Market Cipher. But we have those first initial 8-hour bear divs played with this dump to the downside yesterday. So those have kind of played out. So you'd want to make some new highs and create a new drive now and an overall regional drive of bear divs. But the short from, let me see, what did you say? 63.4. 63? Oh, of a long position at 63.4. Well, you don't want to hit that. Remember, that's your golden pocket. So if we're looking at 1, 2, 1, 2, 1, 2, this is your 3. Now we're in some 4, 5s. If you look at from the lows of wave 3 to the highs of wave 3, you pull that golden pocket. If you hit that golden pocket, it invalidates an impulse to the upside. Yeah, 63.4 pretty much. So it would invalidate the impulse to the upside. Now, that doesn't mean that you're going to do something like you're going to come down here. You could still bounce from there, but you're likely to create a lower high, either at the POC or the value area high, and then continue down. And then a short, let's see, a short position now. The reason why a short is so risky now is because we've broken out of the value area high with a spike in volume, with a high spike in volume. Okay, huge spikes in volume on that breakout. So locally, and I'm talking about like, see, this is the hourly candle. We still haven't even closed an hourly body below the value area high. Now, if you start to close hourly candles below the value area high, could you take a short? Let's say you come down here, you short this, you put your stop above the high. Well, where are you looking as your first TP zone? I mean, that's only a 1-to-1 risk to reward ratio there. Coming down to the POC, because even now that we're attempting to break out of the value area high, if you fall back inside, you're likely to drop to the POC, but that's only a 1-to-1 risk to reward ratio. So, I mean, what are you going to, you know, maybe if you're looking at taking all these lows out, this low, and this low together, it might be worth it. But the larger bullish signals that we're seeing on the chart, I definitely wouldn't, you know, the short to take was earlier today on the SFP. Or to short the exact pitchfork level if you wanted to try to catch a rocket, right? But that exact pitchfork level right there would have been a nice little area. Right now, and I see we're dumping guys right now a little bit, we want to see that corrective move. First off, this looks more like a three-wave move here. Some sort of three-wave move in here, and then we would want to see another three-wave move down to take out that low. And that low is at 62,250 or 64,250. But this looks corrective, guys. This looks like, so far, a WXY correction. Actually, even your bear divs that you had on NAMI were prior bear divs from this high to this high. They got invalidated with the push up. So we're not really seeing bear divs on the 1 hour. Let's go to the 2 hour. Technically, you have some bear divs from the high that we made on Friday to today's high. But locally, you're not seeing any bear divs on NAMI. Money flows rising to the upside. 4 hour. Yeah, no bear. I mean, these bear divs already played out, right? These higher highs, you had lower highs, and it gave you this big dump. So now you'd want to see bear divs between this high and today's high. We don't have our momentum wave making a lower high yet. And even on NAMI, you don't see that. Indications to me are that we're going to continue higher for a little bit. Probably at least until we hit our 786. And if we pull that full Fibonacci from the range highs at 67.2 to the lows, you can see that that 786 is coming in at 65,221. And then our weekly level at 65.7. Where are we at? Is the top of the box. Absolutely, Crypto Wonder. Anytime, man. Anytime. Yeah, so that's pretty much it there, guys. So just to kind of summarize today, the push-up was really nice. It does look impulsive on a nice spike in volume here. Looking at some 1-2s in here, right? Triple 1-2, double 1-2. This is our third wave. So we're looking for pullbacks in 4s before making new highs. And what I think is likely, 1-2, 1-2, 1-2. Let's say it's a triple 1-2, right? Here's our third wave. Our fourth wave is probably going to end on the SFP of 64.2. Then we get a push up. I think this fifth wave is going to push us up to hit that 786. Okay, we're going to see a small reaction from the 786. And we're going to get another small pullback, probably to back test the pitchfork band that we just broke back inside of. And then we're going to get another 5, maybe SFPing, and then you get that last 5 into the weekly or something like that. You know, I'm looking for that choppiness to start coming in here after the aggressive push-up that we saw today. And as we're chopping in these 4-5s and 4-5s and 4-5s, you want to see volume continuing to decrease here. It's hard to be super, super bearish because of the weekly bull divs as far as technicals go. You know, I do know the bond markets do have a big effect on, especially risk on asset classes like crypto. But it is hard. We're at super, super macro support with weekly bull divs confirmed. We had daily bull divs confirmed on both NAMI and Market Cipher B. And on the daily time frame, we had that kind of ultimate setup that I like to look at for trades with NAMI and Market Cipher combined. So that ultimate setup is when you're seeing bull divs. So we have lower lows on the price action, higher lows on the momentum waves on Market Cipher, money flow bottoming out and starting to curve to the upside. Now, at the same time that Market Cipher is showing this setup, because NAMI's quicker, I like to see regional bull divs along with local bull divs, along with money flow bull divs. And we see the perfect setup on the daily time frame for a bigger pump to the upside. Now, that bigger pump just could be to take out your range highs at 67. But combine this ultimate kind of reversal, whether it's, you know, the opposite with bear divs, bearish money flow, and then, you know, multiple drives of bear divs, bearish money flow. We have weekly bull divs to go along with this. So that to me, it's like, man, and it's at such crucial support too. I know we're in a bear market. The technicals right now look good for at least a bigger move up, maybe to 76, 77K. Okay, let's see here. And then let's go look at Near. I think Near was one of the other ones that I wanted to look at. Yeah, Near Protocol. Remember, guys, and I know this chart is messy as hell. We were looking to come down to this green box of support. But when we first tapped into it last week, I remember telling you guys, like, we front ran that naked daily point of control just barely. So we came down again, we SFP'd the low and hit the naked daily point of control. That's also at your golden pocket. Right? So we got that. And since then, even if we're doing another ABC, and then we're going to roll over and come back down, it's likely that we do take out 211.6. It's likely we come take out 211.6. Yeah, and it's likely we come up to 226. 224 to 226-ish. You do have a fresh weekly level at 221.9, and then your previous range value area low is at 221. So it's really a zone between 221 and 226. But this is still the big short zone that I'm looking for. And if we look at our trend-based Fibonacci extinction, yeah, you can see also your 1-to-1 is right there as well at 226. So if this is going to be an A, B, C, this zone here, we could look for a short to take out the lows. And I will let you guys know. Actually, I have the alert set already. And ultimately, we could be looking for a move all the way down to 138 to 132. Because we had an impulse here that finished. And so after an impulse finishes, you're looking for an overall corrective move to come down to the golden pocket, the high time frame golden pocket pulled from this low to this high. And then you're looking for a move up from there. I believe those same bull divs are on gold too on the daily. Let's check here. On gold, well, you do have some bull divs on the daily time frame. On gold, there's one major difference. Look at how bearish the money flow looks on gold. Okay, it's leaving aggressively. And I've always said this on my channel, that it's high probability. Yes, you have bull divs on Market Cipher and on NAMI, but money flow, especially with Market Cipher, one drive of bull divs is not going to be overpowered by bearish money flow. Or I always say bearish money flow is almost always going to overpower a single drive of bull divs. I've been using Market Cipher for over 7 years or more. And I've seen this, how you have a single drive of bull divs. If your money flow looks this bearish, it will play out, you know, it played out with this small move to the upside. You can see your momentum wave on the daily time frame is already starting to curve back down here. I'll bring Market Cipher up full screen. You can see your bull divs have played out with a move up, and your momentum and your money flow is already coming back down. So that's not the best sign there. I don't know why NAMI with gold and silver, the money flow's messed up on the indicator. It is though, at least on the daily time frames, higher time frames, I should say. 8 hours, always important to look at money flow. Yeah, actually, you know what? If we took out that low one more time and really came down to 38.86, so if we did something like this quickly, we could see some really nice bull divs. 1, 2, 3. We could see some really nice bull divs if we take out 38.86. I'm looking for that liquidity grab. Yeah, and thank you, Sky Monkey, for pointing it out, though. Sly Monkey, sorry. I am awesome, man, and that's awesome. You're learning. Keep going, man. You know, it looks like you're getting the hang of it. You were right. There is bull divs on the daily time frame there. You are absolutely right. Let's check the weekly time frame because that is the big difference on gold and Bitcoin. So as Bitcoin has weekly bull divs confirmed, gold is bottoming out in the weekly, but there's definitely no weekly bull divs, which are much stronger than just a single print of a bottom. Also, look at how bearish your money flow's been on the weekly time frame, consistently coming out for, you know what, 3 months, 2 to 3 months. So, you know, 8 to 12 weeks. Okay, I just found this shift pitchfork on BTC Coinbase. Point 1 is January 25th high. Okay, let me go to Coinbase. Let's go to the daily time frame. January 25th high, 0.2. Okay, January. Okay, I think I know what you're looking at. You're looking at the bearish pitchfork, very similar to this pitchfork, but you're pulling it from that second all-time high. So first off, you'd want to go from that high to the low and then to the high up on October 25th. Yeah. And then you would put this as a original. Now, I think what you're looking at, the reason why your skiff pitchfork is coming out a little bit different is because you pulled it from a high to a low. You don't really want to do that. You want to go from high, low, high, or like in a bullish pitchfork, you would want to pull it from a low to a higher low, right? And that would give you your bullish pitchfork. In a bearish pitchfork, you want to pull it from a high to a low to a higher high or a lower high, either way, but you're getting that bearishness there. But I will pull that and let me just let me see what you're talking about. So from a high to a high to a low, and you said a skiff pitch. I mean, it does have some real nice respect on it, right? Look at bounce from the midline, you come up to the upper band, you reject from the upper band, you come down to the bottom band, you bounce from the bottom band, you come up to the midline, reject, then you flip it to support. I would say this is valid. I would say this is valid. And what we're seeing though, if this, you know, if we're looking at this, you can see that you're trying to break above that pitchfork midline today. Yeah, January 20th, October 6th, April 7th. Okay, wait. January 20th. Yeah, January 20th, April 6th, April 6th, April 7th. I guess that, yep. I see what you're doing. You're just taking that bearish pitchfork. So I had the same bearish pitchfork, except I pulled it from the initial range high, this high, instead of this high. But you pretty much are looking at the same exact pitchfork as me. Oops. January 20th, October 6th. Yeah, and that's that modified skiff. So, um, you know, it's you pulled it backwards, but it works, man. Maybe this is another option to pull a pitchfork that I don't know about, but generally you pull it from high to low, or from like in a bullish pitchfork, you pull it from low to high to higher low, and then that will give you your bullish pitchfork in there. In a bearish pitchfork, you pull it from a high to a low to a lower high, or in a flat correction, it could be a higher high. In this scenario, it's from a high to a low to a higher high, because this is possibly a flat in here, you know. But awesome, Odyssey. That's this is nicely respected, man. I would say, as far the way you can tell if a pitchfork or any indicator, right, is accurate, the more it's been respected in the past, the more likely it is to be respected in the future. And I have to say, this looks beautiful. Look at the respect on this thing. Respect, reject, come down here, bounce, come up here, reject, come down here, bounce, reject, break above it, flip it to support, reject up here. You break through it, you flip it to resistance, flip it to resistance, flip it to resistance. And today is our first daily candle where we're trying to break and close above it. I would say that it would be significant to close the weekly candle above it. This would be our first weekly candle close in the last 6 weeks above that midline. But very valid there. I think it is valid, man. It's good find. So if we're looking at that, yeah, your support would be around 63.2, which is where that golden pocket was. You don't really want to come down there. Let me just let's see here. So SCs. I'll save that, and then we'll hide that. We can also look at this small range, guys, of the past 9 days. Yeah, you really don't want to lose your POC here. You really don't want to lose the POC at 63.8, let's say. 63.790, 63.8. Even better is you want to hold above this value area high. And it looks like we are, guys. It looks like we're starting to hold above the value area high. Could you see the one more low so you take this guy out? So you have the confirmed 3-wave corrective move in here, and then you go up. That's what I'm thinking. You look at this as a channel structure, right? So on like the 12-minute, the 5-minute chart, you can pull that channel from high to lower high to low. So I have an alert set on that 64.250 low. If we SFP that and then get back above the value area high, I might enter, I'm already in the long, so I'd have to enter it on a different exchange, or I'd have to add to my long position. I don't like adding to my swing long up here, so I probably go on to a different exchange and do a smaller position size on, you get this, and then you break above. I would do the long. As soon as you start to break the value area high, your stop would go below that wick. And my target would be 65.550, which is the SFP. That would be a nice 3-to-1 scalp. But overall, I'd be looking to come up to like 65.7. So that's a decent scalp trade, right? 3-to-1 risk to reward ratio. Would you mind checking ARB? They partnered with Robinhood. I'm wondering if this could be a long-term. Yes, we can definitely look at Arbitrum. So let's see. Wow, it is pumping nicely. And look at what I can tell you right now. Arbitrum has been in this crazy channel I know this is a messy chart, guys, so sorry about that. But you can see from the all-time highs, we've been chopping in this channel forever, right? We lost the channel, and now we're starting to find reacceptance back inside of the channel. So that is a good sign. Let's go to the daily. And I'm almost looking at a lot of these altcoins very similar to Bitcoin, where we're looking for like accumulation to start forming, like bottomings to start forming. So we want to look at this range in here. And maybe we're going to see this is like your left shoulder or your tap 1. This is going to be your tap 2 in here. You get the move up towards the highs of the range or even taking out the range high. And then you get a tap 3 in here. And then hopefully you get expansion to the upside, right? But yes, I mean, you're pushing up pretty aggressively. 1, 2, 3. I don't like how that is. Your wave 3 should be extending more. Let's check out our trend-based Fibonacci extinction there. Oh, maybe we did come up to the 1.618. Yeah, you've hit the 1.618. And even this here looks like kind of a bottoming, you know, left shoulder, head, right shoulder. You're breaking it. You're breaking your neckline up. And you're back testing it to continue. We can pull the volume profile. It's been a while since I checked ARB, so it's way back here. We can pull it all the way to current price action. And yes, look at, you're breaking back up inside your value area low. So you lost your value area low. You had a corrective move to bearishly backtest it. Upon the bearish backtest and rejection, you make a new low. But after making that new low, let's see, do you have divs on the chart? You did have some bull divs on the chart on the 4 hour. I bet you there on the daily, that's some nice bull divs. Yeah, you can see bull divs on the daily. Bull divs on the daily. You're now breaking back up inside. So today's daily candle close for Arbitrum is going to be important to close above the value area low at 8088. Okay. Right now, we broke back into it. We rejected from the POC. We're falling back down to the value area low. If it holds, you would expect continuation here. Continuation to the upside. Let me get rid of a lot of this old stuff. I'm pretty sure this naked daily and naked weekly are old. Actually, no, they might not be. Let's see, naked daily. Come up there. Oop. So you had the daily bull divs. They gave you enough momentum to break you back up inside your range of the last, 4 to 6 months. Let's see, where does that go back to? February, yeah, so like 5-month long range, right? And this looks like it could be an impulse, right? Wave 1, wave 2, your wave 3 busted you up past the 1.618. You could be seeing that pull back in a wave 4 now, and then you could make a wave 5. Now, I would watch specifically the naked weekly point of control at 10.45 because naked weeklies are high time frame volume resistances. After that, you could see a bigger pullback and then maybe continuation up to the value area high of the range. But because this here was such an aggressive quick move down, it's likely that you could see a quick move up if you break above the naked weekly. Break above the naked weekly and you might see a big pump. Ooh, okay, we need to get rid of that. We put that on log scale because that's more than a 30% dump to the downside. Yeah, that's coming down to, what is that, 53% dump or so. So that's a proper golden pocket. And I like that 786 a lot right up there. Value area high 786, 12.76. And even this golden pocket at 1124, you see this internal liquidity that's all of this, it's right into that golden pocket. But because you're unlikely in your fifth wave, it's unlikely to be that long, like as long as your third wave. So I would be looking for the rejection around the naked weekly point of control. Let's measure it. Let's take a theoretical measurement. Let's say this small pullback we saw right here was our wave 4, and we're starting to work our way up for a wave 5. We can pull our fib retracement from high to low of 4, and we'll put on those wave 5 targets. Yeah, you can see between the 1.236 and the 1.618, but that naked weekly at right around 10.5, that's where I'd be looking for a bit of a pullback. And after you finish an impulse, remember 1, 2, 3, 4, 5, you're looking for a 3-wave corrective move and then continuation. But this here is super important. You broke inside your volume profile and you broke back inside the channel. Right now you're back testing the channel and the volume profile, value area low. So today, if you try to break back inside of it and then you lose it before the day ends and you close your daily candle below it, it's really a failed break-in on high time frames. It's a failed try to break back inside of your fair value. And in that case, I would look to come to take out the lows. So today's daily candle, just watch that daily candle close above 0.88, above or below 0.88. Very important. And you're welcome. You're welcome. Guys, I do got to get going here soon, so keep an eye out in the Telegram. Please do hit the like button if you got any sort of insight into the market from this live stream for me. Please subscribe to the channel, and my bias locally is to come higher. I think we are going to continue pushing up in this local impulse. Doesn't mean we can't come down to 64,250 first, but I do think we're going to come higher. Another thing we could be looking at in our wave 4, instead of like this channel, no, I don't want to move that. Another thing we could be looking at, instead of a channel here, we could be looking at a triangle here, right? Because wave 4s often form triangles. So we could be looking at this as some sort of triangle that's going to form in a wave 4, and then we break up in a wave 5. But thank you guys so much. I hope you guys all have a good evening, wherever you're at, day, night, morning. I will be live streaming Thursday and Friday at 3 p.m. Eastern Standard Time, and I will put out my normal video tomorrow. Hit the like button on your way out, guys, and I will see you in the Telegram